Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Countdown to Jackson Hole. Chair Powell and global central bankers set the stage to set policy tone. And it's a critical week for U.S. politics. Harris gears up for the DNC. Trump hits the swing state trail. And it's a decisive moment for peace talks. Secretary Blinken touches down in Israel for another attempt to clinch a deal. Good morning, Manus.
Danny, good morning. Good to have you back side by side. So it's a pivotal week for politics of the Middle East, politics of the United States of America, but it's got a little bit of a mini wobble. Yen is up by 1%. So much for a lump into the carry trade. Stocks are prevaricating at the moment. It's a mini deja vu of August the 5th, but there is no buyer's remorse. You put on 7 sessions and 7%. Almost 7% on the S&P 500. So you had your best week of 2024, and $5.5 billion flew in there. Nvidia is a little bit lower this morning, a little bit lighter on its feet. What is the quality of the intonation that you'll get from Jay Powell? We'll talk about that in a moment. The quality of the potential cut that could be signaled. Mike Wilson says it's the U.S. jobs reports that will define the next jobs report will define the trajectory for stocks. Bond markets down by 5 basis points last week. Mary Daly in the FT talking about more confidence that inflation is under control. You've got a little bit of light T-bill issuance and $20 billion worth of, $75 billion worth of 20-year paper. But it is the yen. It's the rally in the yen, which is the dollar down by 1%. And I go back to this narrative. The hedge funds have turned bullish for the first time since 2021. You may get the tone and the intonation of a cut from Powell. But, Danny, what is the quality of that tone? Will it be a hawkish, one-and-done tone? That's the nuance that we're going to focus on this week.
Manus, I think the frightening thing for a lot of people coming into this week might be exactly what you're showing, that the yen is strengthening. And it's mild, but we are risk off this morning. The fact that you have the yen strengthening, you have Japanese stocks down nearly 2%, and you have U.S. stocks unable to catch a bid. It's that fear of positioning coming back into this market. The CTSC data just showed that hedge funds have turned bullish on the yen for the first time since 2021. So you get this feeling of, is this happening all over again? Are we really vulnerable at this point that you can have a repeat of 2 weeks ago? And what is a big week for both politics and central banks?
Look, you had a VAR shock. If we go back to August the 5th, you had a VAR shock and you had this cathartic sort of rush out of equities and rush out of risk. What you can say is the VIX is back to normalcy, but the FX market, the FX volatility is still extended and it is still higher. That's what Standard Chartered are basically saying. And I think it goes back to this. Look, Powell may intimate that we're on the roadway to a cutting cycle, but is it going to be a hawkish cut that you get, not like the Kiwis gave last week of we thought about 50 basis points?
Well, that's why I thought Daly was really important. You mentioned it, saying that they're more confident about inflation, but also within that manner, she says that the path there needs to be more patient, that it needs to be gradual. That is not a woman that sounds like she's ready to cut 50 basis points. So she says she is ready, but gradual is the word she used.
And indeed, our guest this morning is Jane Foley. We'll dig into this in just a moment. She sort of says the retail sales is something that takes some of the heat out of the 50 basis point narrative as well.
Yeah, as did Goldman Sachs, downgrading their recession expectations from 25 to 20%. Well, speaking of which, Jane Foley writing this morning, that focus will be on the Jackson Hole event. This will be in the context of firmer retail sales activity, which argues in favor of a 25 basis point rate cut rather than a 50 basis point move from the Fed next month. And Jane, head of FX strategy at Rabobank, does join us this morning. Jane, I wonder what you make of an expectation that potentially at Jackson Hole, 25 basis points will be on the menu, not 50. Yet this morning, what you're seeing in FX markets is a yen that's strengthening by more than 1% versus the dollar.
Well, of course, part of this is not related to the Fed. It's all related to the Bank of Japan. And I think most people in the market now, compared with 2 weeks ago, are now perhaps more satisfied that 25 basis points is what's more likely for September. But for Japan, it's still, the price activity this morning still suggests that there's an awful lot of activity out there. Now, one thing that I think is very interesting with respect to the Bank of Japan is, the market got it wrong on July the 31st. The market consensus thought that the Bank of Japan would wait before hiking interest rates for the better economic data. They didn't. The Bank of Japan went and hiked on July the 31st, but since then, we've had the better economic data. So we've had real wages turning positive for the first time, I think, 27 months. We've had last week the GDP data showing a rebound coming in stronger than expected. So in a way, you could say that USA's more hawkish stance has found vindication in that data. And I think now what we need to know is, well, does that give indication for USAID to carry on being hawkish? And of course, he on Friday will be hauled in front of a parliamentary committee, and that's what the market is waiting to see. What will his tone be?
So, Jane, good morning to you. Good to have you with us. I like your phrase. He's going to be hauled in front of Parliament. And here is the thing. If he shows any backtracking, any sort of step back from his hawkish position, his credibility is going to be seriously lampooned. So threading that needle on Thursday ahead of Jackson Hole, it's going to be pivotal for yen, isn't it? Maybe that's part of the reason why the hedge funds have relocked and reloaded into their net long position.
I think that's exactly right. He's got his credibility on the line, so we can't actually go back and say, oh, I was wrong. Maybe I shouldn't have hiked interest rates. He perhaps has to come out and say, well, look, the economic data, they have improved. They are improving. We can hike interest rates again. That said, I still think that there's no need for him to signal that they'll be hiking interest rates soon. I mean, there is perhaps some speculation that if they go again in October. I think it is more likely that if they go again this year, it will be right at the tail end of the year in December. And we've got to remember, there's a political angle in Japan too. We've had the Prime Minister stepping back from the leadership of the LDP, and that means that there is the possibility that the new leader could call a general election before the end of the year, which again complicates the outlook perhaps for the timing of the next Bank of Japan policy move. So quite complex, I think, right now in Japan.
So if the dollar side of the equation is known, the uncertainties with the yen side, Jane, when it comes to the dollar, if 25 is already largely expected by this market, is it the DNC and political developments and any stopping of the Harris momentum that's more important for the greenback this week?
I certainly think that, because we've got to wait really right to the end of the week till Friday before we hear, Powell commenting, and ECB's lane won't be until Saturday. I think it is going to be the Democratic Convention that's really going to steal a lot of the limelight for most of the week. And certainly, if we look at the polls, if we look at Harris's solid performance really in the last few weeks, the market has got to be thinking, were we hasty in putting on that Trump trade, back in June or in July? And the market has to rethink that. So if the market is less inclined to be putting on Trump trades, well, that could soften the dollar as well. And perhaps I think this has been one reason why euro dollar is back above 110.
And on that euro dollar, it's traded that range, you say, between 106 and 110. But you look at the data in Europe, you look at the data in Germany last week, and it certainly was hardly enthusiastic. So again, is it fundamentally a weaker euro? Will the ECB outcut? Then you got to project forward. Will the ECB be forced into outcutting the Fed?
Well, I think one of the big stories, which has been under the shadows really for most of this year, has been the resilience of the euro. It is one of the better performing G10 currencies in the year today, after sterling, after the US dollar. But it's very quietly been very, very resilient, despite the fact that Germany's economic performance has been poor, despite the fact that we've got, the move to the far right, French politics, budget issues in France and elsewhere in Europe. None of that has really bothered the euro all that much. And so if we anticipate that the euro's resilience is going to carry on, yes, there is a focus on the ECB, but perhaps not a lot else. If we expect that resilience is going to carry on, I still think that most of the outlook for euro dollar is going to be driven by what people think is going to happen to the dollar, and less so by the ECB story.
I mean, it is pretty remarkable. Bank of America pointing out this morning that investors in Europe have just flipped short the dollar. So exactly capturing that sentiment change that you're talking about, Jane. But what happens if it is a Trump presidency? I understand what that means. Well, few people understand exactly what that means for the dollar, but presumably tariffs also mean a weaker Europe. So in the context of politics, how certain is a stronger and more stable euro?
Well, again, the US politics come into it. So if we were to have tariffs now, we could assume that they could if we were to have a Trump presidency, and then if we were to have the tariffs, we could assume that they would be done, fairly quickly. He doesn't need Congress to do that, or he wouldn't need Congress to do that. And so that would perhaps suggest that the Fed's easing cycle would be cut short, perhaps in the middle of next year, something like that. Then the Europeans are going to be thinking about Chinese goods potentially being dumped in Europe that were potentially intended for the US market, so prices coming down. So exactly as you just described, a weaker euro, a stronger dollar. But, that was very much the market's thinking, after that disastrous TV debate between Biden and Trump back in June. And now the market's beginning to think, maybe that's not going to happen. Maybe Harris has got a better chance. And I think this is what's being wound into the euro-dollar trade right now, this second thinking of what the market thought was going to happen in terms of US politics.
Jane, thank you very much for being with us this morning. Let's hope Powell doesn't deliver a Bernanke-style taper tantrum at Jackson Hole. That is your risk away to Thursday, and Powell into the weekend. Jane, thank you very much. Other stories trending on your Bloomberg terminal this Monday morning? What have we got for you? Well, the operator of the convenience store chain Circle K has made a proposal to take over the owner of 7-Eleven chain, 7 & I Holdings. Couche-Tard's bid would be the biggest foreign takeover of a Japanese company if the deal goes through. The merger would create the world's top operator of roughly 100,000 convenience stores.
And Chinese copper exports dropped in July from an all-time high. Local demand conditions are improving. Exports fell 40% from June. That's nearly double last year's level.
And the Ukrainian President Volodymyr Zelensky says the army's incursion into the Kursk region is an effort to degrade Moscow's ability to launch attacks on Kyiv. He says it establishes a buffer zone with the Russian territory.
And coming up on the program, we're going to talk more about politics, about the DNC. The Democrats head to Chicago in the race for the White House.
And later this hour, we'll examine the policies on the tickets so far with Isaac Boltansky, Director of Policy Research over at BTIG. Context matters every day on Bloomberg.
We know our country is going to be as strong as our willingness to fight for it and to fight for what we stand for. When you know what you stand for, you know what to fight for.
That was the Vice President Kamala Harris speaking in Pennsylvania yesterday as she gears up for a big week ahead. Meantime, the former president, Donald Trump, has been counseled by his campaign to avoid personal attacks and focus on policy. At a rally this weekend in Pennsylvania, Trump continued to attack Harris.
Have you heard her laugh? That is the laugh of a crazy person. That is the laugh of a crazy. It's the laugh of a lunatic.
So we're about 80 days away from the U.S. elections, but it looks like Harris has the slight edge over Trump. Joining us now is Vonnie Quinn. She's in Washington for the week, hunkering down for the DNC. Vonnie, good to see you. So what is the objective? What's got to be achieved this week at the DNC? It's got a lot of pomp, a lot of theater, but what does it cut through to?
Yeah, kicking off with the first keynote speech Monday night, President Joe Biden will give that, and then building, as you say, all the way through Thursday when Kamala Harris formally accepts the nomination. The Democrats will want to rally the base. They'll also want to build on this momentum that we've been seeing in order for Kamala Harris to have a successful campaign for the next 10 weeks. As you say, a very short campaign. She didn't go through the primary process, right? So this is the first time that many Americans are seeing her on the big stage, on the national stage. Sure, she's been vice president, but we haven't had the kind of vetting that you might typically have during a primary process. That's going to be a goal. Also fundraising. There are going to be a lot of events taking place in Chicago around the DNC in order for the Harris campaign to be able to continue to spend. It's already spending at a frantic rate between Labor Day and the election, $370 million worth of ads already booked.
America's going to get a split screen, Vonnie. They'll have, of course, the DNC that you've been speaking of, but also Trump on the campaign trail. He goes to the border first and then swing states. What does he need to do to cut through the message? His team has been telling him, focus on the economics, focus on policy. He hasn't exactly been doing that.
Well, that in itself is suggestive of the idea that the Republican Party is not unified, Danny, right? It's an amazing sight to have a candidate tell his supporters what his aides are telling him and basically complaining about that. Trump will be going through these swing states. That was not on his agenda. It is now. So Michigan, North Carolina, two very important states. Kamala Harris is actually leading in North Carolina right now. Directionally, I mean, statistically, it's perhaps not significant at the moment. And we're very early days, of course, polling-wise. Then on Thursday, he will be in that border state of Arizona. As you say, he will be hammering the immigration point. She's perceived to be very weak on immigration. She has answered the question. She has said she'll bring back that failed bipartisan immigration bill. But she may need to say more about immigration. Arizona, of course, being also a state where abortion rights are going to be on the ballot now. We know that. Signatures have been collected. And that will be a key issue for Arizonans as well. Right now, according to the latest New York Times Siena poll, she's actually 5 percentage points ahead in Arizona, but she will need to say more on immigration.
Vonnie, we appreciate it. Bloomberg's Vonnie Quinn in D.C. Okay, now over to Middle East politics. The U.S. Secretary of State Antony Blinken is in Tel Aviv. He's pushing for ceasefire between Israel and Hamas. He spoke after meeting with Israeli President Yitzhak Herzog.
This is a decisive moment, probably the best, maybe the last opportunity to get the hostages home, to get a ceasefire, and to put everyone on a better path to enduring peace and security.
For more on the ceasefire efforts, we're joined by Lisa Odenheimer, Bloomberg Israel Breaking News editor. Lisa, what are still the sticking points that needs to be solved in this negotiation?
Right. So, as we remember, the whole thing started on October 7th when Hamas invaded Israel and took 250 hostages back to Gaza and killed 1,200 people. So what's at stake now is the return of the hostages in exchange for prisoners, for Palestinian prisoners who are being held for terrorist attacks and so on. The main sticking points, of course, are the two important corridors in Gaza. One is a corridor, a road between Gaza and Egypt, where Israel says much of the weapons that Hamas has used against Israel were brought in from in tunnels dug underneath the border. And the other corridor that's another sticking point is a corridor that separates North and South Gaza. Hamas wants the people who have been displaced from the north to be able to go back freely to the north, and Israel wants to be able to check those people and see if they're actually militants or if they're innocent civilians.
Well, yesterday evening we had Hamas releasing their statement accusing Netanyahu of thwarting the efforts of the mediators. Blinken is talking about this as a last opportunity. This is a decisive moment. It may be the last opportunity to get the hostages home. After the Hamas statement, do you get the sense that we're moving further apart from a deal or the potential for a rapprochement?
Oh, it's so hard to tell. I mean, after the meeting in Doha last week, Israel said that they're cautiously optimistic. However, after that, Israeli Prime Minister Benjamin Netanyahu said that Hamas is being obstinate, and Hamas has said that Israel is adding new requests to the ceasefire agreement. So it's very hard to tell. But of course, U.S. Secretary of State Antony Blinken is here right now, and he's pushing very hard for an agreement. So with any luck, yes, it will go through.
OK. Alisa, thank you very much for joining us this morning. That is Alisa Odenheimer on the very latest Blinken's push for ceasefire in the Middle East. Coming up, a look at the other major headlines from around the world across the papers. Good morning from New York.
It's your Bloomberg Brief on this Monday morning. Danny Berger and Manish Cranny in New York. Okay, let's get you some front page news. Here's a look at what's making headlines around the world. Manish, this was on the New York Times. George Santos, he's the disgraced former Republican congressman from New York. He is expected to plead guilty today to federal charges. Doing so allows him to avoid nearly 24 charges. Those include wire fraud, money laundering, and stealing public funds.
It's going to be an interesting day on that one. The journal leads with China. China's becoming a money pit for foreign automakers. In July, the share of EVs shipped to dealers by non-Chinese brands slipped by 33%, down from 50% 2 years ago. The Chinese consumer embracing their homegrown brands, BYD. I mean, that's been the bane of Elon Musk's life in terms of having to cut prices and really try and hold on to his market share.
Yeah, and we just learned from GM last week, too, that their JV is at stake, and they're really struggling to sell their EVs. Now, sticking with China, the FT has this look at airlines, specifically Western Airlines, and them traveling to China. They've been slashing their flights. It's kind of this perfect cocktail of bad things for them. For one, you have just lower demand from China. And then the second thing is that you have the issue of Russian airspace.
Yeah.
Essentially, Western airlines can't fly through Russian airspace where Chinese flights can. It drastically changes your travel time, the amount of fuel you need. It takes something like 9 hours if you can travel through Russia, if you're coming from London. It takes 12 hours and 48 minutes if you have to avoid Russia going from London to Beijing.
Round that up with a tailwind and call it 13
yeah, exactly.
hours.
It's a long time.
I mean, there's also another facet as well. If you just look at who's cancelled what, I mean, BA, but Australia, Qantas has actually cancelled their direct route into the mainland. You look at tourism there in China, it's down 56% from its 2019 levels. People simply are not traveling in the numbers, and they're not spending the same amount of money. So I think there's both the commercial and the business aspect in terms of inbound and outbound travel. But of course, all the Chinese are going to.
I was going to say, the numbers are probably great for Japan.
Probably great for Japan.
All you need to do is look at the luxury earnings. All of them said within China, our figures are weak, but Chinese travelers in Japan are really strong. So all of them have these really strong numbers. So I don't know, if you're an airline in China, that Japan-China trip is probably the one to keep on.
Keep the dream alive for the luxury brands. We'll take you through the political trail next.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger, alongside Manish Cranny. Let's set your agenda.
Countdown to Jackson Hole. Chair Powell and global central bankers take the stage to set policy tone. A critical week for U.S. politics. Harris gears up for the DNC as Trump hits the swing state trail. And a decisive moment for peace talks. Secretary Blinken touches down in Israel for another attempt to clinch a deal. Danny, good morning. Good to be reunited. It's like a mini deja vu of August the 5th. The yen is bid.
I would say very many, because look at this. U.S. equity is unchanged. So it's hard to kind of say we're seeing the big turmoil you saw of August 5th. Even so, we are on track for the best 7-day streak of gains for equities since October 2022, and we're just 2% away from all-time highs. That is a remarkable turnaround from what we've seen just over the past 2 weeks. Yes, there are nerves in this market. Your 10-year yield is lower by nearly 2 basis points, 3.86%. But again, the magnitude of moves in this market is quite remarkable. The 2-year yield, that is below 4%, or just around 4% rather, was at 4.5% in July. All of that comes to a head with Jackson Hole. And this is potentially the thing for markets to worry about, because it's not just Jackson Hole. It is UATA speaking on August the 23rd. And ahead of that, we have this repositioning happening. Yet again, it is a stronger yen versus the dollar by 1%. And it's potentially worrying, man, is that you have this mix of stronger yen and equities in Japan down nearly 2%. They closed down 1.7%. So it's not a repeat of August 5th. But as you say, it has echoes of it. Do we need to worry about positioning again that you can get a stronger yen and risk off elsewhere?
I think it just shows you how febrile it is. From Thursday, Friday, when we talked about relock, reload on the carry trade. In other words, people were furiously reselling the yen. They were buying higher yielding assets. Here we are Monday morning. We're talking about a yen that's bid by over 1.65% at one junction. Not just that bad at the moment, but this is about positioning. The hedge funds have pivoted from, I mean, typical schizophrenia. They've capitulated and they've gone net long for the first time since 2021. So the momentum behind yen is very, very clear. Ahead of, as Jane Foley said, UATA being hauled in front of Parliament. And if he sticks to his hawkish tone. Maybe that's what reinvigorates that yen bid.
Well, just taking a step back, it's this pendulum that keeps swinging, right? Pendulum being in Japan and the BOJ policy, and here in the U.S. It is remarkable to look at all the sell-side funds that came out after the weak jobs number and said, we think a recession is more likely. We think there's going to be something like 50 basis points. And for people to not exactly walk that back, but soften it over the past week when we've had strong data, Goldman Sachs now only sees a 20% chance of a recession. They had seen 25 and says it will go to 15 if the next jobs number is strong. And Bank of America out with a note over the weekend also saying it is 25 basis points that is likely, and we're unlikely to get 50 at all for the rest of the year.
It's going to be the quality of the tone. It's going to be about the tone and the intonation from Jay Powell at Jackson Hole. He's got to thread that needle, and whether he threads it with a intonation of a cut, but if it's a hawkish intonation, it's about the quality of the possible cut that you're going to get. And it could well be one and done. And Goldman Sachs fiddling around over 5% narrative of whether it's a recession at 25%, 20%, just shows you how difficult it is. What does it take to get them to 15%?
And the chop in the markets that can happen in the meantime.
Exactly.
As Manna says, we are awaiting Jerome Powell's remarks from Jackson Hole on Friday and whether or not he'll give the go-ahead for a September rate cut. Ven Ram from our MLive team joins us now. Ven, just looking at the recent Fed talk we've gotten, Mary Daly saying to the FT, gradualism is not weak, it's not slow, it's not behind, it's just prudent. Is this a Fed that's ready to signal something more than 25 basis points worth of cuts?
No, I don't think that the Fed is going to do that, Danny, by a big margin, because, I think that the markets are overpricing how dovish the Fed is going to be. Now, what is going on with the Fed and the U.S. economy? The U.S. economy is cooling, losing momentum for sure, and in the disinflationary narrative is progressing well as well. So what does the Fed want to do here? They want to take rates to less restrictive levels. They do not want to accommodate the economy just yet because the economy is doing just fine. So they are going to measure, on Friday, Powell is going to signal that the Fed is ready to lower interest rates. But he's not going to throw caution to the winds and say, we are going to cut rates by 50 basis points or anything wild like that. I think that the markets are completely mispriced. They are expecting 100 basis points of rate cuts by the end of the year. It's not going to happen. They're barking up the wrong tree.
They're barking up the wrong tree. Goldman Sachs are struggling to decide. I mean, they've come back to a 20% possibility of a recession from 25%. They raised it to 25% at the start of August. They're now back at 20%. And they say it's the jobs report. Mike Wilson says it's the jobs report that will define the trajectory for equities. It's such a high-wire act. Is it the jobs report that will define whether we're at 50 or 25? Has it come down to that kind of binary piece? It's such a big piece of economic information.
Well, I don't think that the Fed is going to overreact to any one data point, Manas, because I think that, what we have learned about the labor market is that it's doing fine. The jobless rate is ticking higher, north of 4%. So it is time for the Fed to start cutting rates and take it to less restrictive territory. But I don't think, even if the jobs report is sinister enough, I don't think that the Fed is going to overdo that, overread into that report and deliver 50 basis points.
The Fed doesn't overread the way the markets overexert themselves sometimes when it goes for like an intermeeting cut. Then let's see what the week holds. A lot of rhetoric and a lot of politics to play for. Ven Ram from the MLive team. Speaking of politics here in the U.S., the Democratic National Convention kicks off in Chicago today. Over the weekend, the Vice President Kamala Harris spoke in Pennsylvania.
We know our country is going to be as strong as our willingness to fight for it and to fight for what we stand for. When you know what you stand for, you know what to fight for.
Meantime, the former president, Donald Trump, has been counseled by his campaign to avoid the personal attacks, focus on policy. At a rally this weekend, also in Pennsylvania, Trump continued to attack Harris.
Have you heard her laugh? That is the laugh of a crazy person. That is the laugh of a crazy. It's the laugh of a lunatic.
We're 80 days out from the U.S. elections, and for now, based on the polls, it looks like Harris has a slight edge over Trump. Joining us now is Isaac Boltansky, Director of Policy Research over at BTIG. Isaac, thank you so much for being with us. It's going to be a week of high drama in Chicago. When you look at these polls, it's interesting. Harris leads Trump 49 to 45. That's on the ABC Ipsos poll. On the CBS YouGov poll, 51 to 48. So she has this euphoria behind her. But to convince the undecided voter, what is the policy narrative that will bring them to her?
Yeah, look, I think two things can be true at the same time. First and foremost, this race has been fundamentally reset, and that's clear in the numbers. And the Harris surge here, I think, has been meaningful. The second part of this, Manis, and I think it's important, is Donald Trump is still leading on the key issues that animate voters in the swing states, right? He still leads on the economy, inflation, and immigration. And those have generally been the three issues that tend to animate, excite, and define the voters' enthusiasm in the 6 to 7 states that will decide this election. So those two things are true at the same time, and that's why we're going to have such a close race. I think for me, what I'm going to be watching this week in Chicago is how much does the Harris campaign try to focus the election on other issues where she is the clear leader, things like healthcare, like abortion, like the senior services issues. Those are all areas where she has clear leads. And I think that's why you're going to hear a whole lot about the care economy over the next 4 days in Chicago.
Well, the last we heard from Harris was about the economy, was about the issue that she lags on, giving policy pronouncements on both housing and price gouging. The Washington Post, in response to this, Isaac, had a very scathing editorial out saying that instead of delivering a substantial plan, Harris squandered the moment on populist gimmicks. Did she, as the Post say, squander the moment, Isaac?
Look, I think that the Harris campaign is purposely at this point keeping some of these policy positions vague. I think that is the goal. That is a feature, not a bug. And I think that's for a number of reasons. First and foremost is Democrats disagree on a whole lot of things. What they agree on is they don't like Donald Trump. And for as long as they can keep that focus on Trump, the better for them, and the more that it's going to influence turnout and enthusiasm and all those good things for them. I think that's one of the reasons that you're not seeing as much of a break from Bidenomics, and why you're not seeing as much new specificity around those areas. Really, the Harris campaign, I think, is treating the Biden predecessor here a little bit like a buffet where you can pick and choose the good parts of the policies without having to respond to some of the bad parts, right? Where we've seen this very clearly. Let's just talk about housing, for example. I mean, it's great. It would be great if they were able to build 3 million new units like they talk about. But instead, the only thing they can really do administratively is push for more down payment assistance. And I think we all know economically, throwing more money at the problem isn't the answer when it's a supply crisis. And so all of these things play well, and they're good buzzwords, and I think you'll see them positively mentioned on Twitter, but they're not things that I think substantively have shown that they were.
Well, either both candidates are deliberately or knowingly ignoring the fiscal side of the equation and just hoping that the bond market gives them the latitude, or else they're just darn, underprepared. How does she counter his weight or his leaning in the swing states on the economy and on inflation? Biden struggled to convince anybody he had delivered the 9% to 3% change in inflation. You say she needs to show more willingness to work with corporate America to take on that lead head to head. Can you just expand on that? What does that look like? What does she need to bring on side on the campaign from corporate America to shift the narrative?
I think one area here, Manis, where you can see some movement from her is going to be regarding the FTC and even possibly the SEC. I know that alphabet soup sometimes can be frustrating to keep a track of, but they're very, very important. And so I'd be interested to see if you do see some sort of softening in her tone, possibly from surrogates, regarding M&A and consolidation in certain markets, while she still keeps hammering home markets where she has concern. Obviously, food markets are the primary focus here, but saying that perhaps she can soften up in other areas of the economy. And again, I think that is the tight line that she's going to have to try to tightrope, that she's going to have to try to walk. That's going to be difficult, right? Because you are running in some ways on the Biden campaign, the Biden White House's record, which has not been one that's friendly to consolidation. So it's a tightrope, and one that I think ultimately is going to lead to them staying at 30,000 feet on a lot of these policy issues.
And you see the unknownness with companies. 319 companies so far in their earnings have mentioned politics. That, according to Alpha Sites, double the number from 4 years ago. Isaac, we really appreciate your time this morning. We'll have to catch up after the DNC. Isaac Boltansky of BTIG. Okay, coming up on the show, U.S. Secretary of State Antony Blinken has arrived in Tel Aviv. He is pushing for an Israel-Hamas ceasefire. We're going to have more on the state of truce talks next on Bloomberg Brief.
This is a decisive moment, probably the best, maybe the last opportunity to get the hostages home, to get a ceasefire, and to put everyone on a better path to enduring peace and security.
U.S. Secretary of State Antony Blinken speaking earlier in Tel Aviv. Ceasefire talks do continue between Israel and Hamas, but they are currently stalling. Here to join us is Bloomberg's Bobby Ghosh. Bobby, I just want to get your thoughts on what you make of that language that we heard from the Secretary of State. Probably the best, maybe the last opportunity.
The last opportunity. That's the phrase that really jumped out at me. This is. I understand why he's saying it. This is his 9th or 10th trip to the region. He's trying to get both parties to focus and move forward. But at the same time, when you say this is the last opportunity, you're putting yourself in a box. The United States is basically saying it's kind of now or never. So if he comes home empty-handed, which all the reporting around the trip so far suggests that he might do, both sides are sticking to their guns, they're not moving forward, then what do you next? What do you do next? Once you've already said this is the last chance, where do you go from there?
Well, the statement from Hamas, which came after these discussions yesterday, was pretty classic, which is Netanyahu is thwarting the efforts of the mediators. Netanyahu is placing obstacles, reaching an agreement. Now, there's a certain amount of backing for Netanyahu, both in terms of kit deployed to the region, etc. This administration, you say, has not publicly said that it is Netanyahu that is the obstacle. Does this administration need to pivot? Is that what you expect to happen? If we're in the last chance saloon for a ceasefire, what have they got left? What's left in their arsenal to push Netanyahu and Hamas together?
Well, this administration has been playing this very careful sort of game for a while now, whereas on the one hand, it has been supplying Israel with the weapons it wants. It has, in public, been backing Israel and blaming Hamas for the failure of the talks so far. In private, when briefing journalists in Washington, the same administration has been blaming Netanyahu. In private, they say it's Netanyahu's fault mainly. He keeps making these unreasonable demands. By the way, there are echoes of that in Israel. There's plenty of reporting in Israel that supports the view. The big question is, will the Biden administration dare to break out of that routine and in public openly finger Netanyahu for this? I'm skeptical that it will, especially the politics surrounding it this week with the Democratic National Convention in Chicago. I don't see the administration openly blaming Netanyahu. But as I said earlier, where do you go from here?
Well, at the same time, you have Iranian spokesperson coming out this morning and saying us retaliating is our right, and it has nothing to do with the ceasefire talks. I mean, what does it mean to have this still in the background, this unknowingness of what happens when Iran does finally retaliate?
Well, it's Iran reminding everyone that they have their own agenda, they have their own timetable. Again, the Biden administration has been suggesting that if there was some movement towards a ceasefire, Iran might hold off. How the Biden administration feels that it is authorized to speak on behalf of Iran, I don't know. But this is Iran saying, we have our own, we speak for ourselves.
Yeah, well, it does buy a small window as well in terms of we were building up every day last week in terms of understanding the retaliatory force. And this is a small step back from that all out. But that doesn't speak for the proxies. Bobby, thank you very much. Bobby Ghosh there on the very latest from the Middle East. Let's turn to the earnings slate Monday morning. New set of reports. Estee Lauder will hit before the bell. The cosmetics giant is one of the many companies that has been hurt by soft demand in China. Joining us now for a quick setup on this is our Bloomberg European consumer goods reporter, Dasha Afanasieva. Dasha, good to have you with us. Estee Lauder. We've seen lots of Western companies under pressure in China. Just how much pressure did they have? How much is the headwind for them in China? Good morning.
Good morning. Well, Estee Lauder's got the similar China problems as L'Oreal, but it's got a whole world of campaign besides. It's in the middle of a turnaround plan. And for me, it's also a corporate governance issue because the Estee Lauder family, the Lauder family owns about 38%, but has the majority of 86% of the voting power. The same chief executive and chairman, who's a member of the Lauder family, have been in their roles since 2009. And meanwhile, in the last 2 years, Estee Lauder's lost 65% of its market value. So if I was an investor today, I'd be looking for some sort of good news on a recovery after 6 of the last 8 quarters showed negative growth.
Dasha, it is really remarkable because you've had luxury companies fight some of these headwinds, do well in Japan, for example, do well with ultra high net worth individuals still shopping. Does the fact that there is some concern about Estee Lauder show that they're kind of losing this battle to remain in the upper echelon and capture this kind of consumer?
I think it's a constant battle. Every time you buy a brand, you have to keep investing in it to keep it relevant. Otherwise, it just kind of fades away. You know, the likes of MAC, that's on the top of color cosmetics anymore. That's an Estee Lauder product. And at the same time, you've got these headwinds in the US, weaker US consumer, weaker Chinese consumer. So to counter that, it's a constant effort. And they've only just in the last few quarters since the November turnaround plan been kind of in emergency mode. Let's turn things around. Let's come back to boosting profits, reducing inventories, and it's really an uphill struggle.
Okay, Dasha, we appreciate it. We'll see what today brings. Bloomberg's Dasha Afanasieva. Okay, let's get a quick check on your markets this morning. It is about the strengthening in the yen, but at the meantime, the dollar is weaker. There you go. There's not the yen. Your euro.
You couldn't make it up.
Yeah. Well, I mean, at least we see the euro. To Jane Foley's point, you know, euro is remaining strong and resilient in this context of a weaker dollar, of a stronger yen, despite the fact that European growth isn't doing that well.
It breaks 110. I think she said it had been so well behaved between 106 and 110. There's your dollar yen for you. That's the yen strengthening by over 1%. The hedge funds have gone net long for the first time since 2021. But that euro is actually breaking above 110 for the first time. We both looked at this, just the end of 2023, and the dollar's on the back foot.
Yeah, and perhaps alarming in that context of a stronger yen is that you do have risk off. Just a faint echo of what we had.
Teeny tiny.
Just teeny little
teeny
echo.
tiny.
Okay.
What will Ueda say when he is hauled in front of Parliament on Thursday? That's ahead of Jackson Hole. We're going to send you up for your week ahead. She's back. It's good to have her here side by side. Context matters every day on Bloomberg.
It's your Bloomberg Brief, Danny Berger and Manish Krani in New York. Okay, let's get you set up for a busy week. Politics kicks off today with the DNC. Then Vice President Harris will be delivering her acceptance speech on Thursday. We also get Fed minutes. Those come out on Wednesday. ECB accounts on Thursday. And then we're going to round out the week with Fed Chair Jerome Powell speaking on Friday at Jackson Hole. And we'll also hear from Ueda testifying in front of Parliament on August 23rd, Manis.
Yeah, like what Jane Foley said, he's going to be hauled in front of that Parliament. Does he stick to that hawkish tone that he delivered after the Bank of Japan raised their rates? Bond markets are going to be front and center for us, Danny, as we say, counting down to Jackson Hole. You've got a drop of 5 basis points last week. You got those Fed minutes, as you just pointed out. So you're just seeing a little bit of a drop in yield in the very first instance this morning.
I mean, the move in the front end of the curve has been extremely remarkable. 4.5% is where we were in July. It goes back down to 4%. Does it have more room to go, Manis? Potentially not. Potentially the direction of travel is higher yields, given that we're still pricing in 30% odds of a 50 basis point hike. I go back to what Mary Daly said to the FT. Gradualism is not weak. It's not slow. It's not behind. It's just prudent. And then goes on to say, while the labor market is slowing, it's not weak. You probably need a weak labor market in a Fed that isn't arguing for gradualism to get something like 50 basis points.
Well, she talks about having more confidence, and then this lines up the ducks for what Powell will actually say when we get to Jackson Hole in terms of the intonation that you are possibly going for a cut. But the question is then, how hawkish is that cut? And that's the difficult part. Then you look at other things like Goldman Sachs, who are prevaricating between a 25% possibility of a recession here to 20%. But what does it take to get to 15%?
I mean, it's remarkable to come off a week of really strong economic data, and we're still debating cuts. Cuts
Indeed.
are still on the table. That is very clear. Okay, that's it for your brief surveillance. That's up ahead on Bloomberg.